Hi, it's November 17th, and I just want to thank everyone who wished me a happy birthday last Friday. So, thank you for that. I just want to talk a little bit about the markets, and if you're a new investor, I would highly suggest dollar cost averaging into some quality stocks like Amazon, Google, because you just can't go wrong with that. I was looking at Alibaba today because they reported their earnings. You take a look at FinViz, they're up 6.45%. Huge green candle here. And hopefully it doesn't go back down because there is a gap here now. And we can see this trend line. It was struggling to stay above, and finally it did. In the last couple of days, it went from a low of 65 all the way to 83. And unfortunately, I don't have anything in Alibaba. I lost all my money in options, unfortunately. And that's the bad thing about options, because we need to be able to predict which way the stock will go in the time frame we choose the expiration for. So there's just a lot of variables that needs to happen in order for us to make money. And that's why dollar cost averaging and just buying common shares is the best way to go. Like I was saying before with Amazon stock, we can see same thing. It hit this trend line here, a low of 86. It did hit above 105, but couldn't break this resistance here back in early November. And now we are at 95.20. But if we take a look at a monthly chart, we can see that it has been going up, been trending upwards, hit a high of 180, and now it did pull back. But this creates a great opportunity for people that are looking to invest long term. And Amazon used to be $3,000. They had a stock split, and now it's affordable for people. And I can't believe I used to own Amazon shares back in end of 2020, when I actually had money. But I am just slowly trying to save. It's very hard to save money because you have to be able to make enough to pay your expenses and then have enough to invest. So it's been tough. Same thing with Google. It's been uptrending, hit a high of 150 almost, and now it's at $98. So stocks like Google, Amazon, they're I mean, they're not gonna go bankrupt anytime soon. So these are pretty good investments, I would say. Or even the SPY, the S&P 500, 393. And there are stocks that people love, like meme stocks, but they're just so dangerous, so risky, and I wish I had stayed away from them from the very beginning, such as BBBY. We have some EV stocks like Lucid. That stock, let me see where that's at. It's at $11 now. And of course, we also have AMC, which is at $7. So my direction was right. I had naked calls, but unfortunately at that time I over leveraged. And when you over leverage on something, it goes against you. You're gonna lose a lot of money. So that was my mistake, and I just couldn't stop. I couldn't stop trading, couldn't stop buying calls and selling spreads. So that was my mistake. And hopefully, we can all try to make our money back, because I know it's been a rough year. it's been very tough for me in the last 2 years. I should have just called it quits after that huge loss, but I continued to try to get my money back, and eventually I lost it all. Lost my Roth IRA, everything I have, my savings, everything. It's gone. So I pretty much just have to start from zero and work hard and try to find some side hustles to make money. I'm not making any money from YouTube at all. I'm not even monetized. In order to make money on YouTube, you have to have a lot of views. And unfortunately, the stocks that I talk about are not that exciting. So I'm going to try to make a video on a meme stock and see how many views I can get from that and just compare. If you have watched this whole video, thank you.